All right, traders, today is the 11th of June, 2017. My name is Jameson. We are looking at a weekly vertical bar chart of American Outdoor Brands AOBC. So here's some observations. One, this is distributive. We have our preliminary supply. This should be PSY, not PS for preliminary support. That's incorrectly labeled. We then have our buying climax, automatic correction, secondary test. There's our stopping action. We don't have a sign of weakness, though, present until later on through here. So essentially we have another retest. We can appreciate that in this final retest here, there's no demand. Like, I mean, look at all the buying effort that's here. Now there's not a lot. Like that's an up thrust at the distribution. And then prices break down. Here's our last point of supply. And now we have a sign of weakness. We retest this level of support. This is our last point of supply, and then we break down. Now we create a spring. It's a little bullish changing character. There's some bullish reabsorption that's present. Drove prices back into this ice level that's here, and into resistance. And into the 50-day simple moving average. Now, the character at which that we're doing so is on contracting demand here. So we have contracted demand into a level of resistance. So conditions exist that this is an opportunity that shorts can actually sell into support here. So I think there's a lower risk entry on the short side here. Additionally, if we measure the amount of time spent in consolidation here, we have a bearish price objective of $18, which would go back to back testing this spring. That's a pretty reasonable expectation. Additionally, it may just break down and retest the lower trend line. But if you calculate all of it, it actually goes down to $9. I think that's a little unrealistic. Nonetheless, though, we have accumulation, markup, distribution, and now we're in the markdown phase. So I think there's a good, reasonable entry here on the short side, so long as demand continues to contract. And when we break down, there's the emergence of supply.